Bismillahir Rahmanir Rahim. Start in the name of Allah, the most merciful and the most kind. Dear friends, I'm Shoaib Rahman, and today I'm going to record a lecture on one of the most important topic of financial accounting, that is balance sheet. So before wasting your time, let's get started. What is balance sheet? First of all, the question is that what really balance sheet is. So a balance sheet, also called the statement of financial positions, can be defined as statement that reports a company's assets, liabilities and shareholders equity at a specific point in time. So here you should note that what is balance sheet? Balance sheet can also be called a statement of financial positions. In simple words, when we see everywhere the balance sheet is defined as that it simply shows the financial positions of an organizations. And it can be also defined as financial statements that reports company assets, liabilities and shareholders equity. Actually, these are the financial positions of a company, that are assets, liabilities and shareholders equity. But here you should note that it is written at a specific point of time. At a specific point of time, which is one of the most important point you should note. Specific point in time means that it shows the financial position of a business, but when it shows at a specific point in time. It means that, for example, it could be a specific point of time, could be 31st December 2019, 31st December 2018 and whatever your accounting periods, okay, or what months in which you want to see the financial positions of your balance sheet. Okay, balance sheet is a financial statement that provides a snapshot of what a company owns and what a company owes, as well as the owner's equity. At the end, it says this simply: a balance sheet provides a snapshot of what a company owns and what a company owes, as well as the owner's equity. Okay, so next, balance sheet is completely based on the simple equations, that is assets equals to liabilities plus owner's equity. This is the main equation for balance sheet. The whole balance sheet concept is based on that equation, that is will be equals to liabilities plus owner's equities. Okay, so before going deeper in the balance sheet, we should know what are assets, what are liabilities and what are owner's equities, or what is owner's equity. So let's get started to know about the assets, liabilities and owner's equity. The first one, assets. Assets can be defined as anything of monetary value owned or controlled by an individual company or organization with the expectation that it will generate benefit. Okay, so here assets can be defined as anything of monetary value owned or controlled by an individual, company or organization with the expectation that it will generate benefits. Assets can be broadly categorized into short terms or current assets, fixed assets or non-current assets, financial investments and intangible assets. Okay, before going into types, we have to understand what really assets are. Okay, assets, first of all, it could be anything. Anything means that it could be land, it could be building, it could be car, it could be cash, it could be bank, whatever. But of what type? Of monetary value. Must be have the monetary value. By monetary value, it means that it must be in the form of not in the form of, but it should be represented in the form of cash. For example, it could be in dollars. For example, buildings, we know that building prices it could be in dollars, it could be in euros, etc. And owned, most important is owned, not just from other party, but it should be owned, and not only owned, but it should be also in the control by that individual, that company, or that organizations, and with that expectation that it will generate benefits. Why we keep assets in our business? For the only expectation to generate some benefits for the business. So this is the simple definition of assets. So assets can be broadly categorized into short terms, current assets, we call it fixed assets, or non-current assets, financial investment, and intangible assets. So okay, now let's define the types of assets. Okay, the types of asset, the first type of assets is current assets. All those assets which can be easily converted into cash and cash equivalents, typically within 1 year, are called current assets. And current assets are also termed as liquid assets and short-term assets. Okay, what are current assets? Current assets are those which can be easily converted into cash or cash equivalents. What does it mean? First of all, when you have cash in your business, it is already current, it is already considered as current assets. But all those things which are cash equivalents, for example, your money in your bank account, could be considered as cash equivalents. And the most important things, all those assets which can be converted into cash, typically within 1 year. The 1 year is most important here, because the current assets are actually connected with the time period. So all those assets which can be converted into cash or cash equivalents are called current assets. And current assets are also termed as liquid assets and short-term assets. The examples of current assets are cash, cash equivalents, account receivable, inventory or stock, short-term deposits, office supplies, prepaid expenses, marketable securities, etc., etc. So these are that kind of assets which can be easily converted into cash within 1 year. This is why this is called current assets. These are called current assets. Okay, the second type is fixed assets or non-current assets. Non-current assets are assets that cannot be easily and readily converted into cash and cash equivalents within 1 year. This is the definition of fixed assets. We defined the current assets, that those assets which can be easily converted into cash within 1 year are called current assets. And fixed assets could be defined as the assets that cannot be easily and readily converted into cash and cash equivalents are called fixed assets. Non-current assets are also termed as fixed assets, long-term assets, or hard assets. It means that you can also call the fixed asset as long-term assets, non-current assets, and hard assets. Okay, examples of fixed assets are land, building, machinery, vehicles, etc. But you should note one thing: vehicles. For example, if you have vehicles means cars, etc. But if you have these vehicles in your business for trading purpose, it means that your business is of vehicles, you buy and sell these vehicles, then this is not your fixed assets. Then these things are come actually in your stock, so then it would be considered as. But for example, if you have a car, vehicles, not for the purpose to sell it but for use, then it is called fixed asset. Okay, the third one type of assets as intangible assets. Like its name suggests that intangible assets are assets that do not have a physical existence. Examples of intangible assets are goodwill, patents, copyrights, and brand, etc. Actually, these assets have no physical shape and not physical existence. That's why these are called intangible assets, and this is one of the kind of assets. The next one is fictitious assets. The best way to understand fictitious asset is to memorize the meaning of the word fictitious. The word fictitious means not true or fake. So, fictitious assets are not assets at all. However, they are shown as asset in the financial statements. What we mean by financial statement here? The balance sheet, only for the time being. In fact, they are expenses and loss which for some reasons couldn't be written off during the accounting period of their incidence. Examples are preliminary expenses, discount allowed on issue of shares, etc., etc. So actually, fictitious assets are not assets at all. They are actually expenses and loss, but we keep a record in asset sides, and with time being, we little by little we pay off, or we just decrease it by time by time by time. Okay, the next one, liabilities. It is one of the part of balance sheet. So what is liability? A liability in general is an obligation to or something that you owe somebody else. Liabilities are defined as a company's legal financial debts or obligations that arise during the course of business operations. So what are liabilities? Liabilities are, simply we can say that this is an obligation which we have to pay. Liabilities are actually the legal financial debts or obligation that arises during the course of business operations. For example, we just got a bank loan, or we just purchased something on credit. So these are the obligation which we have to pay. Okay, the types of liabilities, there are three main classification of liabilities, or we can classify the liabilities into three types. Okay, the first one is current liabilities. Current liabilities, also known as short-term liabilities, are debts or obligations they need to be paid within a year. Okay, like we just discussed the current assets. Similarly, all those assets which need to be paid off within an year is called current liability. Examples are account payable. What is account payable? For example, when we buy something on credit, this creates account payable which we need to pay. Actually, it is obligation for us to pay. Bill payables, bank overdraft, short-term loans, interest payable, etc. So these are the current liabilities. Non-current liabilities or long-term liability, we can say. Non-current liabilities, also known as long-term liabilities, are debts or obligation that are due in over years time. Simple, like we just defined the current liability which should be paid and within 1 year. So when there is a liability which need to be paid in more than 1 year, is called non-current liability or long-term liability or non-current liability. So non-current liabilities are like also known as long-term liabilities, are debts or obligation that are due over years time. Example of non-current liabilities are long-term loans, mortgages, capital lease, bond payable, etc. These are liabilities which we pay it means that we shouldn't pay within 1 year. It's okay if you pay it after 1 or 3 or more years. Okay. The next type is contingent liability. Contingent liabilities are liability that may or may not arise depending on certain events. Example of contingent liabilities are lawsuits, product warranty, etc., etc. Okay, this is not important type, that's why I'm not going to detail in deep. Okay, the next section of balance sheet is owner equity. Owner's equity. Owner's equity, often just called equity, represents the value of the assets that the owners can lay claim to. Or in other words, owner's equity is defined as the proportion of the total value of a company's assets that can be claimed by its owners. So now here if you see, the words owners are bold. Why? Because one should understand that who really owners are, or what is owner. So let's to define the owner. In simple words, owner is the person or persons who own the business. For example, in case of sole proprietorship business, he should be a proprietor. In case of partnership, they could be partners, or in case of corporation, they could be shareholders. Okay, next one, format of balance sheet. Okay, balance sheet has three main sections, which are asset sections, liability sections, and owner's equity sections. We discussed earlier all these three sections, and I hope now you have a better understanding of all these three sections. There are actually the two main format of balance sheet which are used in a business. The first one is account format. What is account format? In account format, the balance sheet is divided into left and right sides, like T account. Like we make a T account of ledger account. Similarly, in this case, we just make a T account. The assets are listed on the left hand side, whereas both liabilities and owner's equity are listed on the right hand side of the balance sheet. So this is one kind of format, and the example of account format balance sheet is given here. You can see here on the top we write the name of the company, and after that the balance sheet, and for the period of to which this balance sheet refers, and after that on right side we have here the assets, and on the left side we have the liabilities as well as owner's equity. Like you see that assets are then divided in a groups: current assets, long-term investments, fixed assets, intangible assets, and other assets. And similarly on left side we have current liabilities, long-term liabilities, total liabilities, and stockholders equity. Stockholders or shareholders are the same thing. Okay, and the next format that is used in the business is a report format. In the report format, the balance sheet elements are presented vertically instead of horizontally. That is, asset section is presented at the top, and liabilities and owner's equity sections are presented below the asset section. So this is actually the representation of financial position. It would be same. It means that if you represent the format in the form of account or report, doesn't matter, the result will be same, but it is only the difference in the presentation, only the difference in the format. So the report format balance sheet is given here, like we on the top we write the name of the company and date, and similarly we just write assets on the top and liabilities and owner's equity in the bottom. So this is the format of balance sheet, and I hope you got understand about all these things. And thank you so much for watching that video, and don't forget to like, share, comment, and subscribe to our channel for more such videos on accountings and more basic courses. Thank you so much.